morning. Welcome to IG's early morning call. It's Thursday, the 8th of February. Let's take a look at the headlines as we see record highs on some of the Wall Street indices. And we're looking for the European markets to hold on to yesterday's performance, broadly speaking. But in a moment of history, briefly we saw the S&P 500 tip over 5,000 for the very first time. It closed just shy of that. And we saw a new record high on the Nasdaq in the session in yesterday's trade. As we continue to monitor what's happening on the economic backdrop, the macroeconomic picture in China remains really concerning, with deflation continuing to be the really bad, poor stalking horse of the markets. Consumer price index recording its steepest fall in 14 years. The producer price is falling for a 16th month in a row. And as we monitor a number of companies out with earnings over the last 24 hours, for me, the pick of the bunch is Disney, up almost 9% in the session. Extended trade on the IG platform late last night, looking for a stronger start when Wall Street gets underway today. Bob Iger finally performing after having come back as chief executive some 14 months ago. The stock is up at near one-year highs as he hits back at activist investors with a number of announcements around broad sweep within the group. Let's take a look at volatility, pretty much down for a fourth day, 1438, indicating these risk assets are seeing some appreciation. That being said, in London, that's not the case. Yesterday, we saw some fairly hefty declines across the European markets at one point. Concerns in the London markets are that the Bank of England might not deliver interest rate cuts as fast as many had been hoping. And that's where things are looking at the moment. At 76.36, we're not too far away from where we closed out the cash session yesterday, but that big reversal that we saw in yesterday's trade being maintained. German DAX, new all-time record high in yesterday's session, above the 17,000 level for a second day in a row, before pulling back late in the trading day yesterday. We've got a green candle at the moment, but broadly speaking, whilst the trend is still in place, we are holding on pretty much to much of yesterday's negativity. French CAC 40. Again, a negative day in yesterday's trade when all was said and done, despite the fact we saw the market peak up at 1 week highs at one point, or 6 or 7 day highs at one point. But then came the reversal late in the session yesterday. As I said, it's broadly speaking a concerning picture about interest rates and central banks, not just the Bank of England, but also the European Central Bank as well. Fears are that it might well be that we might see some of the interest rate cuts that were penciled in at the start of the year pushed back into later on into 2024. Now, overnight in the Asia-Pacific markets, it really has been a particularly good day for some of these markets. The Nikkei 225 knocking on the door and hitting a new 34-year high, up over 2% at the close in the session in today's trade. We'll take a look at the yen in just a minute, which I think is mechanically behind what we saw there with that gain on the Nikkei, with the yen pulling back on the session today. Hang Seng Stock Index down 1.34%. The concerns about the Chinese economy with that deflation number stalking that market, with a gain on the S&P ASX 200 by a modest 1/3 gain. But let's take a look at what's been happening in the US markets, because that's where much of the headlines over the last 18 hours have really been scored. S&P 500 gaining almost 0.9%, near 1% rise there for the Nasdaq. Let's start off on the Nasdaq first of all, the US Tech 100. Showing you this new record high. If we have a look at the chart, what I'll do is I'll bring that red dotted line up there to that new all-time record high at 17,788, and we're building on that at the moment. Not quite at a new record intraday record high today, but very close to that. But let me just show you what happened on a 15-minute candle chart, because this just highlights what happened. With that candle there, which was about an hour and a half into the session in yesterday's trade, all of a sudden it peaked up. It hit that 17,000 level that we'd had, and then we've seen the markets pull back a little bit. I wanted to show you that chart because I wanted to show you what's happening on the S&P 500, because going into 15-minute candles, very similar sort of thing happening in yesterday's session. With that peak, again, albeit very, very briefly above the 5,000 level, with that little bit of a shooting star candle, and then came a drop. And we haven't seen the 5,000 level challenged again on from that point late yesterday. So the S&P 500 looking as though, at the moment at least, we've got a little bit of selling. But to be frank with you, this sideline that we've seen since that record high, the all-time record high beyond 5,000 in yesterday's trade. Let's look at what's been happening in some of the other areas of the market, because I want to pick up on this business about the Chinese deflation. Consumer prices falling at their steepest pace in 14 years overnight. Let's take a look at the figures. National Bureau of Statistics said that the CPI fell 0.8% last month year on year. Economists had forecast a fall, but by a more modest 0.5%. The annual CPI drop in January was the biggest since September 2009, led mainly by a sharp drop in food prices. Producer price index sliding 2.5% from this time last year in January after 2.7% drop in the prior month. So the message is that the Chinese economy has deflation. Let's take a look at this chart here, which is the USD against the offshore Chinese yuan. Little move at 720.75. Talking about the currency markets, later on today we get some economic data out in the States worth watching the dollar for. 1:30 p.m. initial jobless claims, the weekly numbers coming through, expectations after 220,000 new claimants last week after 224,000 in the prior week. A bit later on, 3 p.m. today, wholesale inventories forecast to rise by 0.4% in December month on month. I want to show you what's happening with the dollar basket, because after these highs that we saw back on Monday this week, where we saw the trade at the highest level not seen since the 14th of November last year, since then we've seen a little bit of money taken off the table. This trend is still in place so far as I'm concerned. We've got 1, 2, 3, 4. This is the culmination of what is essentially another fifth wave impulse. It's not quite the move that we'd seen prior for this market. Let me just quickly take a view, though, on what's happening. With that drop there and the subsequent rise, this looks like it could well be another Elliott wave that's beginning to form. So I would expect a pullback here, and then we might, this could well be the start of a three-wave correction. We'll have to see what happens with that. We'll keep an eye on that. But this Elliott wave here has matured with that rise to that high that we saw back on the 23rd of January. But these waves continue. It's just a question of directional travel. At the moment, if you're short on this at 103.67, your stop goes above the recent highs around about the 104.30 level if you are short on the dollar at the moment. Now, this is producing some interesting moves around the euro dollar level. I've circled this drop down here to a total retracement of this fib down at the 107.24. Again, this is for me just a little bit of a rise for the euro against that slightly weaker US dollar at the moment before another fall, waiting for a candle close below the 107.24 to take me all the way down to 105.17. But I think the interesting chart for me is what's happening here, because some of the fundamentals on the Japanese yen are becoming interesting. Now, we've seen the losses that we saw at the back end of last year for the dollar against that stronger Japanese yen was on expectations that monetary policy would start to tighten come 2024. Well, we've already seen one Japanese central bank decision to leave interest rates on hold. And overnight, dovish remarks by the Bank of Japan Deputy Governor Yoshida Sunichi, saying that, let's bring the chart back if I can, because I think it's important to look at this in the context that we've been seeing about this. The Deputy Governor Yoshida Sunichi saying that the central bank will not hike aggressively upon ending negative rates, and that's weighing on this. Now, my point is that we're up against this line of resistance at 148.80. And I want to see a candle close beyond there. And then it'll take us up to the 150 level, which we hit, what was that, back on the 17th of November. And the highs that we've seen for the dollar against that weaker Japanese yen at 151.91, this is the area where we could well see some sort of intervention from the Bank of Japan unless they do something. But at some point, doubtless we will see the Bank of Japan start to tighten monetary policy, in which case you could well see a reversal of what we've seen for this dollar strength recently. But at the moment, at least, it is all a story about what's happening with some of the fundamentals and the commentary around the central bank, which now looks like it's going to be taking a slightly more dovish opinion. Now, let's move on to take a look at what's been happening in some of the corporates out today. I want to begin with AstraZeneca, forecasting higher revenue and profit for 2024. The drug company betting on stronger uptake of its infant RSV shot and resilient demand for its cancer and rare disease drugs. Let's take a look at the figures that we saw break this morning. For 2023, AstraZeneca reported revenues of $45.8 billion and core EPS of $7.26, both broadly in line with expectations. AstraZeneca is one of these stocks that sometimes goes under the radar. We have seen some move recently. We're currently trading at 104.99. Now, if you're long on this going to the start of today's trade, your stop goes underneath the low points of the candles that we've seen recently. I'm not totally convinced we're going to get much upside on this, and I think it could well be that we might not see too much move at all there for AstraZeneca stock. That being said, one of the stocks I think could be worth watching on the upside is Unilever, witnessing an improving picture across the year. Unilever being these brand companies. There's a picture of Marmite there, for example, Haagen-Dazs ice cream. It's got Ben & Jerry's. It's got a whole long list of well-known products, Dove soap and so forth, as well as a number of household cleaning products. Adjusted sales up 7%. Unilever fourth quarter underlying sales up 4.7%. Bloomberg estimates have been for 4.5%. I think these numbers looking pretty good. Operating profit up 2.6% at 9.9 billion. Operating margins at 16.7%. Now, this is up 60 basis points, so that's a positive as well. Gross margins up 200 basis points for the year and 330 basis points in the second half. So as the chief executive says, they're witnessing an improving picture right the way throughout the year. And as a result of this, there's now a new 1.5 billion euro share buyback program that's expected to commence in the second quarter of this year, sometime in the current quarter. Let me show you a share price chart for Unilever. Let's assume that we're going to see some unwinding of this negativity we saw yesterday. If you are, let me put that up there. If you are long on this, we are opening at 39.40. I put my stop below the 39 level with a view to taking it higher. If we see a beat of this line that we saw here on Tuesday this week, you're then back at levels not seen since the 10th of November last year. So Unilever looking good over the last couple of weeks or so. I think today's numbers demonstrate the support there for that stock. Stay on the charts. Let me just bring up what's happening with British American Tobacco, just to show you what's going on there. We had debated whether or not to bring this up as an indicator at the start of the day's trade. It's reporting a 5.2% increase in full-year profit. Now, that beat expectations. We saw a second down array of losses yesterday. This company still makes, it's incredible actually, when you talk about some of the products it makes, like Dunhill cigarettes, Lucky Strike. These are real old economy type stocks, but they still make money out of cigarettes. Not so much here in the UK. And of course, there's a move by the government to try and ban smoking completely from the youngest age groups. Adjusted diluted earnings per share stood at £3.86 compared with £3.76, the consensus from analysts polled by the business. So it's looking pretty good at the start of the day's trade. We're opening at 23.23 for British American Tobacco. Again, staying on the charts, just want to update you as well on what's happening with watches of Switzerland. You'll remember the price action we saw at the back end of January with this slide that we saw, the big drop that we saw on concerns about the outlook because the company was giving a big warning with the outlook for the sale of watches, particularly clouded by the economic outlook. Guidance has been reconfirmed from the company from that 18th of January warning that they had there. Group revenue for the third quarter, £397 million. We've been previously expecting, what was that, 407 million this time last year, so it's down from that. 9-month full year group revenue, 1.158 million. That's down as well on last year's figures. Quite frankly, this is a company I'd probably avoid. But there is the potential for further downside if we get a further warning on concerns about the outlook for these expensive watches. Let's take a look as well at what's happening in the German markets, because Siemens has reported numbers, one of the largest component parts of the German DAX, reporting first quarter profits slightly ahead of expectations, despite a slowdown. The company is saying at its factory automation unit. Let's take a look at the figures there. Industrial profit, the biggest part of the business, rising by 3% to €2.75 billion, beating forecasts to 2.6 billion. Revenue up 2%. Below the expectations at 18.4 billion, mainly due to an unfavorable currency move, according to the company this morning. It's worth looking at the share price here for Siemens, and that we've seen this stock rise recently. In fact, it's at record highs. Let me just take you all the way back. It's at record highs for Siemens stock. When was that? That high came through on the 2nd of January this year. We've seen it very close recently at the back end of January, and the stock looking good potentially, I think, for an upside surprise here. Yesterday, long-legged doji candle indicating to me that investors were unsure which direction to take it, but this has been confirmed this morning. And at 167.48, which is where that stock's going to open, there's potential upside. My initial price target would be €170, and then possibly beating this record high as we see the stock open in reaction to those numbers, which look on the good side this morning from Siemens. Now, there's a lot of European banks that are finding they're going tough, and SocGen is one of them. We saw last week a big emptying out of the share price of BNP Paribas, and today we could well get the same sort of thing. SocGen reporting a sharp drop in fourth quarter net income of nearly 60% to 430 million euros, still beating the 333 million that many had been expecting. Group revenue in the quarter dropping almost 10% to about 6 billion euros. SocGen also announcing a proposed dividend of 90 euro cents per share. Similar report as well from a French rival, Crédit Agricole. Let me just go to take a quick look at SocGen shares, down recently, anticipating, I think, this poor number. That was the day when BNP reported their poor numbers, and since then we've seen a further downside. It's interesting, isn't it, when you get companies like UBS doing so well, not too far away from record highs for UBS, and here we are with BNP Paribas and SocGen on the way down because of earnings. Let me just bring up a share price of a Crédit Agricole as well, another French bank, reporting group net income of 1.3 billion, down 25% this time last year, again above analysts' poor expectations, sales miss expectations as well. So Crédit Agricole, another stock that could well see a potential downside at the start of today's session. Now, Disney stock rose to a very near one-year high in extended trade on the IG platform late last night after the release of the entertainment giant's quarterly earnings, which overall had a mixed effect in terms of their numbers. Earnings were better than expected at $1.22, but revenue missing forecasts coming in at 23.5 billion. The Disney Plus streaming service shedding 1.3 million subscribers as well, a possible negative for this, nearly double the loss forecast by analysts. Analysts anticipated growth across all three segments, entertainment, experience and sports, but revenue for the entertainment segment fell 7%. So why did the stock do so well? Let me just bring up a share price chart of Disney to show you what happened late in yesterday's session. Investors pleased by a $3 billion share repurchase program for the current fiscal year and a dividend of 45 cents a share, a 50% increase from the dividend paid in January. Now, let's focus on this share price gain that we've seen, because it's taken us up to levels not seen since the 17th of February. Disney enters the world of gaming by taking a $1.5 billion stake in Epic Games. This is a positive for the stock that we saw late last night. The two companies will work together to create a huge Disney universe where consumers will be able to interact with characters and stories from Disney, Pixar, Marvel, Star Wars, and Avatar. This is a really big, strong stable of background characters that the company can play on. Bob Iger also unveiling details about a streaming launch of the ESPN Sports Network. It'll be bundled together with Disney Plus and Hulu, and it's likely to launch in August 2025. With these announcements, Bob Iger hit back at the detractors. Disney has been under pressure from activist investor Nelson Peltz, who, with former Disney executive Jay Rasulo, want to join the company's board. The last thing they said we need now is to be distracted in terms of our time, our energy by an activist investor that frankly have completely different agendas and don't understand our company, its assets, or even the essence of the Disney brand. This is what Iger said late yesterday on CNBC after the release of the numbers. So Disney up and looking good as the company digests the business that it's sending out in terms of share upside. Now, PayPal last night, very different outcome for PayPal, online payment company, dropping 8.7% in extended trade. Let's take a look at the figures that we saw there. Eclipsed a better than forecast earnings and sales, but the company expects adjusted earnings per share of $5.10 for 2024, unchanged this time last year. It didn't provide an outlook for revenue and operating margins, though, for the full year. Revenue coming in at $8 billion, better than expected at 7.8 billion. Earnings per share better than forecast as well. But the outcome of the lack of vision saw a drop in shares. And you can see here, I was talking about this yesterday with the potential move outside of this symmetrical triangle. We did get the downside. The downside target for me is down here, which is the height of the internal part of that symmetrical triangle. That would take us there and back to levels not seen since the 14th of November. So at 58.16, still got a short trade in place, very close stop loss. My price target 54.20. No all session stocks due to report earnings this morning, but a couple worth a mention. Philip Morris, after that better than expected number coming through from British American Tobacco. Philip Morris International expected post earnings of $1.45 per share on revenues of just over 9 billion. Philip Morris has been focusing in on reduced risk products, i.e. non-cigarettes, the growth of heated tobacco products such as IQOS and ZYN, Means the group is likely to become a majority smoke-free company by 2025, according to the business. Meanwhile, Kenvue, formerly the consumer healthcare division of Johnson & Johnson, this quarter will continue and conclude its first full year as a standalone firm. The street anticipates earnings of 28 cents a share on revenues of 3.6 billion. Now let's move on to a couple of other areas of the market worth looking at. I just want to bring up a share price or a price chart for WTI. It's up for a third day in a row at 74.23. US crude oil inventories rising 5.5 million barrels yesterday, according to the EIA. Last month, the US Gulf Coast was hit by a deep freeze that knocked off 15% of refining capacity at a national level. Refinery crude are running at their lowest level since January 2023. US gasoline stocks falling by 3.1 million barrels. Let's go back to the chart and take a quick look at what's happening for spot gold. Down in today's session, but not much move overall at 2032. That's it for me. We'll be back at 10:30 with Charting the Markets. A couple of stocks to watch out for at the start of today's trade. Compounding the problems at Watches of Switzerland. Interesting to see what developments will be there, but slightly better than expected earnings at British American Tobacco. Also Siemens, worth watching as a possible positive at the start of today's session at the top of the hour. Still looking for markets, broadly speaking, holding on to yesterday's losses overall.